Welcome back, and if you're just tuning in, you're listening to Health Tech Talk. I'm Ben Chodor, and we're broadcasting from the iHeartRadio studios, 640 WGST, and streaming worldwide on the iHeartRadio network. All right, we had a great first segment and a half, two great guests, but now I have two guests together. Nothing could be better than this. All right, I have an amazing lawyer and an advisor on. I have an amazing banker on. These are two people that I know very well. I like to consider them friends. But I think the key of this segment, before I introduce them, is for everybody out there, the goal here is if you're starting a business, if you have a business, if you're out there trying to raise funds, if you have an idea, who are you going to turn to? And part of the key is finding a good team. And so basically, for the next, 20 some odd minutes, you have, like I said, a banker, an advisor, a lawyer, an advisor, and myself, an entrepreneur. And both of those guys are entrepreneurs as well. And we're going to try to help you guys out. We're going to give you some suggestions. We're going to walk through a business, and we're always here if anyone needs anything. So without further ado, I want to introduce you to my guests. First is Joe Statter. He is president and managing director of Evergreen Advisors Capital. And Andrew Ray, who is partner of Morgan Lewis Bockius, a prestigious law firm, and Joe's company is pretty incredible too. These guys have been around for a long time. Joe has not only been a banker, but a CFO of companies, and Andy's firm has represented some amazing deals. Like part of it was the Oculus VR deal when they sold it to Facebook. He's worked on a lot of other programs with M&A and across the board. So I'm not going to spend a lot of time talking about their backgrounds. If they want to get into it, they could. Gentlemen, welcome to the show, and how are you today?
Terrific. Thanks, Ben.
Ben, thanks for having us on.
I would love that. I want to jump right in, all right? First, I'm going to ask Andy this question to start off. Andy, any company out there, if they're thinking of creating a business and they're out there looking for money, what's one thing that they should be thinking about?
The most important thing that a company should be thinking about is how they, in turn, are going to make money. Investors want to get a return on their investment, and to them that means a company has to build a business and generate revenue. So the principal focus needs to be the business model that's going to lead to revenue.
Incredible. And Joe, if you have to give me one before we jump into this.
I would say the company needs to address a real pain, and not a pain that can be solved with just aspirin, to use an analogy. I mean, they've really got to have a market opportunity that is big. It doesn't need to be huge for a market opportunity that's growing really fast. So, Ben, we all have experience in digital health.
Yep.
And, that's kind of a ground-swelling opportunity now that's got a lot of legs to it. And it's a market opportunity from a size perspective that is growing very, very fast. So I tell people, if you're going to go for something big. Healthcare is a monster industry, and the segments in digital health that are being addressed are really big problems.
But how do you stand out?
That's my advice.
But how do you stand out in that? Because it's so big, and either of you can answer it any time you want. So how do you stand out? How do you make what you're doing jump out?
One thing you can do, and you may know something about this, Ben, is create your own space. I mean, it's only been pretty recent that the terms patient engagement, care coordination, interoperability, data analytics are starting to come out in the context of healthcare. Wearables, data sensors, capturing the data, and then using that data across other venues to improve outcomes and reduce the cost of care. Creating your space, creating a buzz about the space is a great way to get noticed.
The other thing that
blow it out.
The other thing that I would add is sometimes we say you shouldn't try to boil the ocean, and as Joe said, you should try to address a serious pain problem. If there is a serious pain problem and your product, your startup addresses it, you will get noticed.
I think that's pretty incredible. Hey, Joe, you have this little saying about, for the digital health revolution, there's 5 points. You want to tell the audience
Sure.
what you mean by this?
Yeah. we kind of break down the digital health taxonomy in 5 areas. One, I've mentioned a couple of these already. One is patient engagement.
Yep.
Second is care coordination. Third is data capture via sensors and wearables. Fourth is data analytics. And the fifth are interoperability tools and technologies.
That's like kind of dead on, Joe.
Thank you, Ben.
I'm very impressed. No, I kind of like that, and the audience should take that to heart because the audience here that's listening to HealthTech Talk. This is a business show. About a third of the audience are the investor community. A third of the audience is people creating companies, and the rest are the people that we're all selling products to. It's the consumer, right? So this is really important stuff to think about. Healthcare is only going to grow bigger. Healthcare and technology is only going to become more of a staple. I want to take a step back and. Andy, will you tell our audience just a little bit about your background? And then, Joe, will you jump in so at least they know from where you guys are talking from?
Sure. So I am a partner at Morgan, Lewis & Bockius, which is, I've learned, the largest law firm in the United States. I'm resident in the Washington, D.C. office. I practice full-time in the corporate finance and M&A area, and I focus in telecommunications, media, and technology, which includes technology and media around digital health.
And Joe?
I started my career at Arthur Andersen as a tax guy, and after 5 years of that, I got the opportunity to change careers within Andersen and became a founding member of their corporate finance practice. So I did that from 1993 to 1998, and then I got recruited away by a fairly substantial but boutique investment bank called Friedman Billings Ramsey in the D.C. area. And I worked for Friedman Billings Ramsey from 98 to 2008. Last couple of years there, I ran the communications and media practice of that bank. And in 2008, I left FBR, joined a special purpose acquisition corp, and did one of the few successful transactions for that type of vintage SPAC. And then in 2011, I joined the team at Evergreen Advisors. I opened their Washington, D.C. metro practice, and Evergreen Advisors helps emerging growth companies basically raise capital, gain liquidity through a sale process or a recapitalization process, and we also help companies buy other companies to help them grow. And then the firm has 2 other legs to the stool, which is business valuations and outsourced CFO services.
So Joe, here's a question a lot of people ask. I'm out there doing a raise. I've built a company. Why do I need a banker? Why do I need an organization like Evergreen?
Sure. I think the biggest reason you would need a banker is and they're related. One is the time element, because raising capital is a huge distraction of your time. And second is the knowledge of the marketplace. And when I say knowledge of the marketplace, it depends upon the stage of development of your company. And you can waste a lot of time talking to the wrong people, because within, let's just call it the venture capital community, there are firms that will play at early stages but won't play at later stages. There are firms that will play at later stages that will not entertain deals that don't have a substantial amount of revenue yet. And then there's this kind of new kind of fund that is morphing called a growth equity fund, which is really looking for companies that are sustainable and already flowing cash and really looking to solve for a liquidity issue that a founder or founding shareholder has, and will buy their shares directly from that shareholder. So depending upon what your situation is, you could waste a ton of time talking to growth equity companies when you really need, your classic earlier stage VC.
So it's not just for raising, and it's not just for growth money, and it's not just for sales, it's for all the things. I'm a big believer that you need to have a good banker if you're going to raise. I did it with my last company. I think it really paid off. I've advised a lot of people too. And so, Andy, I'm going to ask you the same question. So I know you advise a lot of startup companies. You get involved with a lot of angel. Why do I need good team around me?
So, as Joe said, being efficient about your time is the most important thing that a CEO can do. You have to leverage yourself, and you have to develop a network. You have to develop an ecosystem around your company that can help your company get to the next level. If you have the right advisors, and you have good chemistry with those advisors, and they're active with early-stage companies like yours, they can work with you to help expand your reach and connect you to others who can become part of your team, whether as investors or as co-founders or as customers or as strategic partners.
That's incredible. This is one of the most fascinating segments I've ever had. Can't believe that the first segment is over. I need to cut to a commercial. We're going to be back after these words from our sponsors. You're listening to Health Tech Talk, and I'm Ben Chodor, and we're broadcasting on iHeartRadio.
Everything's bigger.
It's time for 43 of America's best to punch in at Texas.
Every lap, a shootout.
Keselowski trying to get to the outside of Jeff Gordon for the lead. Dead heat at the stripe. Joey Logano is out front. Down on the bottom is Keselowski. Door to door, side by side. Jeff Gordon rides up the racetrack. He blocks Joey Logano. Now Logano cuts inside. At the stripe, it's a dead heat.
The Duck Commander 500. Saturday, April 11th at 6:30.
Your home for NASCAR in Atlanta. Talk Radio 640. WGST.
Ever have one of those days when the clutch in your brain goes out, your mouth won't work, and you cannot find a good attitude to save your life? Hi, this is Jeff Foxworthy. When I have a bad day, I try to remember those kids that I have visited who are fighting cancer. Their little bodies are weak from battling this dreaded disease and from surgeries and cancer treatments, but they're not sad or down. Incredibly, they have this great attitude that they're going to beat the tar out of this monster, childhood cancer. They believe they'll survive. In their courageous hearts, they believe we, the grown-ups, will do something about this monster. They believe and trust in us. If these kids have the heart to keep fighting and living, then the rest of us must have the heart to help them. Your donation to Cure Childhood Cancer will help fund the life-saving research for kids who are battling and believing. It'll make your day. Donate at curechildhoodcancer.org.
Guys, if you've been using or wanting to try Viagra but are worried about the costs, we have great news. Now you can finally get real results at huge discounts with our Healthy Men alternative to the little blue pill. Why pay U.S. pharmacy prices of $15 per pill or more when you can get results for a fraction of the price? Call today and get 40 pills for only $99. Others cost as much as $600 at your local pharmacy. You can't afford not to call us if you want real results at the lowest prices. Never pay $15 a pill for Viagra when you can get real results for less than $3 per pill. Call 800-539-8159 today and save over $500. You can have those breathtaking, toe-curling moments again and again. Healthy Man is fast, easy, and affordable. Call right now and we'll rush you your supply delivered discreetly to your door. Just call 800-539-8159. That's 800-539-8159. Again, 800-539-8159.
My wife and I just moved into our new home when wham, the refrigerator died. Then wham again, the air conditioner had a meltdown.
When moving into a new home, the last thing you need is an unexpected home system or appliance breakdown. It could cost you a fortune. That's why more and more home buyers are getting a home warranty from American Home Shield. A home warranty protects against those unexpected covered breakdowns, including your air conditioning, water heater, plumbing, refrigerator, washer, and much more. When it comes to selling a home warranty really can make or break the deal. For complimentary, helpful information, see your local real estate professional or call 1-800-700-5198. Service requests are subject to a fee for each trade called. Some exclusions and limitations apply. Home systems and appliances do break down. That's why a home warranty makes so much sense. And American Home Shield delivers award-winning service. For complimentary, helpful information, including terms, rates, and coverage, call American Home Shield. 1-800-700-5198. 1-800-700-5198.
Tune in Sundays at 9 a.m. for the Call Cleve Atlanta Real Estate Show with host Cleve Gaddis. Learn what's going on in the Atlanta real estate market. What's going on with home values? What are the best school systems? Find out the answers to everything real estate on Sundays at 9 a.m. on WGST.
Glenn Beck!
The center is not in between Lindsey Graham and Harry Reid. That's not the center. There's nobody that says, you know what I think it really makes a lot of sense is that Lindsey Graham. You know what I think makes a lot of sense? Harry Reid. Nobody says that. We must start saying them. We must start living them. We have to start modeling them. We have to start reaching out to each other and start listening to each other.
This is the Glenn Beck Program.
Weekday mornings at 9:06 on Talk Radio 640 WGST.
Welcome back, and if you're just tuning in, you're listening to Health Tech Talk, broadcasting from iHeart Radio Studios, 640 WGST, and streaming worldwide on the iHeartRadio network. All right, we just had a great time before the last break. I have two amazing guests. It's the first time I've had two guests on at the same time. I'm going to definitely do it again with these two. I have with me Andrew Ray, partner at Morgan Lewis Bockius, and Joseph Statter, president and managing director of Evergreen Advisors Capital. Welcome back, guys. We were talking about raising money, why I need bankers, why I need advisors, and I want to jump in. There's this big thing going on, crowdfunding, right? So everyone has heard of Kickstarter and Indiegogo and the whole space. First, I want to direct this question to Andy. Andy, as legally, I mean, just as a lawyer mind, should I be worried about crowdfunding?
Should you be worried? Should you be concerned that investors with limited resources are going to lose their money? I don't think you should be worried.
Okay.
From a public policy perspective, I think the SEC is all over protecting investors from exposing themselves to too much risk. I think the real question is on the entrepreneur's side of the house, and that is crowdfunding really an opportunity for me to raise money for my business? There are few things in my 20-year career that have gotten as much attention and press as crowdfunding. There are endless stories in the newspaper about it. It's anticipated to be the holy grail to fund startups. Every a day it seems you can open a newspaper or read a blog and hear about Oculus with the Oculus Rift, or exploding kittens, or whoever the latest and the greatest is. I think the real challenge for the entrepreneur is separating the hype from the reality. In our practice, where we see success is a startup or an emerging growth company that uses crowdfunding as a component of its marketing and fundraising strategy. So often it's the case that a crowdfunded product effort is integrated with an old-fashioned bricks and mortars effort to raise funds for products. Likewise, on the financing side, what we see with the successful crowdfunders is that they are, raising money the old-fashioned way through relationships, through face-to-face meetings, and then those financing transactions are integrated with fundraising effort on one of the crowdfunding platforms, like an Early Shares or a CircleUp.
Right. Joe, anything you want to add to that? On your side, on the banking side, do you advise clients not to? I mean, I have an opinion on this. My opinion is the positive about it is it's sort of the public speaks. If you can raise money doing a crowdfunding thing, and then you go to traditional investors and say, hey, look at me, look how popular I was, I think that's really good. On the negative, if you don't raise a lot of money on your crowdfunding, hasn't the public spoken?
That's a great point. It's a valid point. What I want to make sure, what I take my clients to the paces is what is the end game with your company? And if you are going to be a company that's going to be relatively capital intensive for whatever reason, and the capital need that you have ends up being in the tens of millions versus just the millions, then you need to be aware of what your cap table, your capitalization table looks like, and your investor roster looks like. If you know you're going to need to go out to the institutional investor marketplace, meaning the VCs and the growth equity funds, because they get very worried about liability and unwieldy structures for them to invest into. So you got to think a little bit longer. Sometimes it's tough to get out of the weeds and get your head out of the weeds and think longer term for your company and what's best. And that's the advice that I give young companies is, look, you've got 10 angel investors that have funded you right now, and you're going to blow it up and have 50 more through crowdfunding or 100 more through crowdfunding. Then you're starting to get a pretty tough crew, and you start working on, when I say tough crew of shareholders, it can get unwieldy at times, and you could be in a position of constantly herding cats, and you have to think about how you're going to manage that investor base also, because everyone's going to want questions answered and see how things are going, and my experience is it's that $10,000 investor, not the $100,000 investor or the $1 million investor.
Yep.
That bugs the entrepreneur the most.
I agree, man.
I agree. Think longer.
And Andy, did you want to jump in?
Yeah, it's Andy. I think Joe is spot on, and I think one of the insights that the seasoned entrepreneur develops as he or she goes down this path is that the receipt of their check is not the last time you talk to that investor. In fact, the care and feeding of that investor has only just begun. There's no question. I think your listeners are probably well aware that the angel marketplace has developed into a robust source of funding for early stage companies, and that's terrific. It's also the case that the VCs are now beginning to accept angel syndicates when they look to do a Series A financing. But Joe is spot on. There's a big difference between 10 angel investors who have pre-existing relationships with the founders and an additional 50 crowdfunded investors who were found through some online platform.
Well, and I could sort of add in that, an angel funder is not always a friend and family funder, right? So angel funders are a lot of times they're entrepreneurs who have had success and now they're investing in companies, and I think they bring a lot to the table because I'm going to seek every investor I have to help me grow my company. Joe, Andy, any opinions?
There's no question that the best angel investors are folks who may be a decade or two older than the founder and who have had a successful exit, who have been there and done that. And different geographic markets have more or less robust angel ecosystems. The angel ecosystem in Silicon Valley is quite well known, but there are strong angel tech ecosystems in the greater Washington area, in New York, certainly in Boston, in Austin, Texas, and in other places as well. It's a bit of a misnomer, misunderstanding out there that all angel investors are kind of doctors and dentists. In fact, more and more of these angel investors that we're seeing are, folks who've had successful exits.
Yep.
Yeah, they're successful entrepreneurs and have a lot to offer and a lot of miles traveled that the entrepreneur hasn't traveled yet and can be really a great sounding board and source of advice.
Use your investors. Use your investors. If they invest in the company, they believe in the company, get people who are going to help you grow your company. All right, I got 15 seconds left for each of you. Andy, final comments?
Build your ecosystem. Surround yourself with people who can help you succeed. Think about how you put together that team and pick advisors that have good chemistry with you and who can be in the foxhole with you.
Awesome. Joe, you got 10 seconds.
Go after the big market opportunity and be flexible. Keep your eyes open. Keep your ears open. Be ready to pivot. Be flexible.
This might be my favorite segment ever. I cannot wait to have